Good afternoon and welcome to everyone who's joined so far. I'm sure there are some folks that are hopping on as we're chatting now, but because it's 1 o'clock, we're going to go ahead and get started. This presentation today is going to be primarily covering the new bill that was signed in December. So a lot of you folks probably saw in the news that there was a new act that is essentially an extension of the CARES Act. We're going to be covering this today and giving you some information about the PPP second draw loans and some other topics. Before we get started, I did want to briefly just let you know the Dreamspring attendees today are Kevin Williams, that's me, I'm talking right now. I am our senior SBA loan officer at Dreamspring. If you've been to one of these webinars before, you've likely heard me talk through some of this content. We also have Gwen Bonilla, who is our lending and client services specialist. Gwen, by and large, we refer to her as the Jack or Jill of all trades. She tends to just kind of pick up a lot of special projects. So for example, this morning, Gwen put our Spanish version of the PPP application online for us, which is great. We also have Rachel Burgoyne, who's our lending team manager. So you'll likely be hearing from both them once we get to the questions stage. Looking at kind of the overview for today, I know that there are a lot of questions pertaining to different topics. We're going to be covering the PPP first draw loans. That'll be kind of quicker because we've talked about that quite a bit, but there are a few small changes I wanted to highlight there. We're also going to be talking about changes to the PPP forgiveness program for first draw loans, changes to our 7A loan program, but the bulk of the conversation today is going to be around the PPP second draw loan applications. So diving into this now. One of the main questions we get from people is, will this round of PPP be like previous rounds? And what I'm kind of getting at there is actually not even the substance of the bills or the legislation or what's going on there exactly, but really trying to focus on, okay, internally and externally, what's our client experience like? During the first round, if you worked with us, it was a very interesting time from a lender's perspective. We kind of got an outline of the bill in March. Things went live in April. In a lot of ways, I referred to it, and internally we talked about it being kind of like the movie Apollo 13, where you've got this giant problem you suddenly need to solve with whatever's in front of you. What's great about this round, though, and coming back to the Paycheck Protection Program, is that we've had months to get ready. So in the interim between when you either got your first PPP loan or when the program shut down in August, we've been actively getting ready for this round. Big areas I think we've seen a lot of growth have been improved client communications. One of the pieces that we saw as a point of feedback from folks pretty regularly was that we just didn't get information to you as quickly as you'd like. We were hard to get a hold of by email. And so we have a new software program we're using. It's actually going live today that I think will really help with that. I think will let us communicate with you a little bit more effectively about what's going on with your loan, what the stages are, what we need from you. We also made some really big tweaks to our approval efficiency. So the good piece there is that we're able to move loan applications further, faster. We've just made some changes to the application internal systems, which is great for us from a capacity level. It just means there are more small business owners we're able to help. We also have a streamlined application process that makes the information just a little bit easier to get to us. And I think one piece that's really exciting for me personally, at least, is when the first round of the Paycheck Protection Program came out, it was actually a fairly confusing process. There's a kind of this trickle of information where they said, okay, there are these new forgivable loans, and they didn't exactly say, okay, how do you calculate these? How do you actually get it forgiven? This time around, the good piece is that the guidance that we've received from the SBA is actually much more understandable. What's nice is that we understand the program better, so as we're rolling this out, we're able to give you the answers you need in order to apply correctly. Really briefly talking about first draw PPP loans. And so a first draw loan, they've changed this language. They're now saying that the original program was the first draw program. And so anyone who did not receive a first draw PPP loan is able to apply again. So that was the program that was open largely from April until early August of last year. There's a slightly changed application form. There's some different eligibility. So it says, for example, 501c6 organizations are now eligible. By and large, this program is very similar to what it was previously. Really looking at this from my experience, business owners, there was this kind of period of uncertainty and a lot of questions that were surrounding this first draw application. So if you did not receive a first draw loan, if you haven't gotten a PPP loan yet, if you weren't able to get approved before the deadline, we are absolutely processing those. We're accepting applications at dreamspring.org. I did also want to encourage anyone on the call, if you did receive a PPP loan previously, just to realize that there are probably some business owners you're in contact with that were not able to get funded in the first round. We all know that the rollout was bumpy for folks and it was confusing and it might have been hard to get approved through your bank. But for anyone that didn't get a PPP loan, the program has largely returned, just with a few small tweaks to it. The next changes we wanted to highlight today are changes to the PPP forgiveness process. Part of this we're waiting on still. It says the new application for loans under 150,000 will be released in the coming weeks. The SBA, I think by the bill that was passed, I think December 26th or 27th, they have, I think it's 20 business days from then. And so I have it kind of in my head to look for that around January 18th. What this is essentially is a tweak to the forgiveness process that the SBA is telling us will make that process easier. We've heard the word streamlined. We've heard that there might not need to be as many documents involved. I am going to hold off on committing to exactly what that looks like until we get that in hand, because really that's a document the SBA is generating. But what I'd say for the moment is if you received a first round PPP loan, if your loan was less than $150,000, at the moment, I'd probably wait until those changes are released. From what I've heard, it might just take up less of your time. If you've already applied, so for example, if you've applied and your loan's less than $150,000 and you're still waiting for a response from us, you actually don't need to do anything further there. The reason being is that we will continue to process your application under the old rules. A little update for folks I think most people tend to appreciate is, of the forgiveness applications we've reviewed and sent to the SBA, we are checking over them before we send them to the SBA. We've had 100% of those be forgiven. The good piece of that is that means that the SBA believes we're submitting those correctly, and we've gathered the necessary documentation from our borrowers ahead of time, which is good. And so we've had good success there. If you're above 150,000, you can apply whenever you'd like. You should have received a pre-filled application link. If you're below 150,000, you haven't applied, you can wait until changes are released. And if you've already applied and you're below $150,000, no further action should be needed. The other piece of this that's been exciting is that the idle advance reduction was a topic of conversation for a lot of folks, where what this meant is if you received an idle advance being a payment from the IRS or Treasury or SBA, I believe it's from the SBA directly, of exactly $1,000 to $10,000 in increments of $1,000. So for a lot of folks, they might not even realize this money was deposited. It might have been $3,000 or $4,000. What was happening was that was actually being reduced from borrowers' forgiveness amounts. The SBA released clear guidance on this in August. And what it meant was for a lot of people, they're going to end up with a loan balance. The good piece of this is that the idle advance is no longer being reduced. And so what that means is if you apply for forgiveness, you should hopefully be eligible for your full loan amount to be forgiven. One thing that's important, we've had around 500 or 600 borrowers who've already had their loans forgiven. Of those, there have been a couple hundred who have had an idle advance deduction associated with their forgiveness request. If that's the case, the SBA did release guidance on Friday that you actually will not need to do anything. Essentially, they're going to make the changes to your loan retroactively. I would expect to see that coming out in late January here. But the good piece is if you are left over with a balance because of an idle advance, we should be able to get that taken care of for you with no further action needed on your end. One thing I did want to address, we are seeing a couple of questions popping up and a few folks that are raising their hands. I think Rachel and Gwen might be responding to some messages throughout this, but we are going to have a time for more questions at the end. And so just in the sake of time, I'm going to keep bumping forward, as I know there are a lot of questions on today, probably regarding the second draw applications. The other program I want to talk about briefly are changes to the SBA Community Advantage Loan Program. So the Community Advantage Loan Program, this was also included as part of the bill. What this means is that for any current SBA Community Advantage loan with Dreamspring, they're going to have 8 months of their payments that are covered by the SBA. And so what that means is if you have an SBA 7A loan, you're going to have 8 months of your payments are going to be covered starting in February. The question we get pretty regularly from folks is, okay, I have a loan with Dreamspring. These are different than PPP loans, and they're different than a lot of our normal term loans are as well. And so if you don't know if you have an SBA loan, you probably do not. The SBA process is a little bit more in depth. Most folks kind of recognize that they're signing different loan docs. They've got more things to be filled out there. But the main thing to highlight for most borrowers on the call is that it's actually a really exciting program in that the SBA is really trying to make sure that business owners have the ability to continue to grow, continue to expand. And so they've really changed some of the SBA lending program going forward. The changes that are important for the moment being that until September 30th, meaning if you're approved by September 30th, your first 6 loan payments are covered by the SBA. And so what that means is that they're making the payment on your behalf. Your loan balance is going down, but you're not having to pay anything for it, which is great. And then also most of the origination fees are waived with that. Our SBA loans are typically between $50,000 and $250,000. We do go as low as $35,000 in some instances, but this can be a really good opportunity for borrowers to get a really good type of loan in order to grow or expand your business. You do still need to qualify through our underwriting department. So this is different than a PPP loan in some ways because we do have some credit score requirements. Typically, we're looking for at least a 650. There is collateral that's going to need to be pledged. You need to meet cash flow. And so, for example, if 2020 was a really hard year for you and you're looking to just kind of get something to get by, the PPP program is probably better for that. So the Paycheck Protection Program. But if you need to consolidate debt that you took on this year, maybe you had to take out some unhealthy loans previously. If you need working capital, if you need to expand or change your business or get new equipment, this can be a really good opportunity for that. And there's actually a pretty long period of time. So until September 30th for approvals in this program. Kind of getting into the more kind of meaty chunk of the presentation for today, the second draw application. So you've heard about a second round of PPP coming, the fact that some business owners are now going to be eligible to get a second PPP loan. So we're going to give you an overview of this. By and large, this new application process is very similar to the first one. So this is specifically for people who've already received one PPP loan. So you were approved sometime between last April and August. You received it. You may or may not have applied for forgiveness yet. And the new application process allows you to qualify for your second loan. The changes to this are pretty modest, honestly, and they won't really impact very many of our borrowers. So for example, it is now for loan amounts under $2 million, Dreamspring is only allowed to lend up to $250,000. That's not a change for us. You need to have fewer than 300 employees, which we haven't had any entities that are that large because we're primarily working with smaller business owners. And there are a few new things you need to substantiate. So for example, some things regarding your affairs with foreign governments and things like that. Really, those changes are pretty basic. The other piece of this, though, is the revenue reduction requirement, which we'll talk about in another slide, and then increased loan amounts for impacted industries. The last bullet point there, it says your first loan does not need to be forgiven before you apply. So this is an area I want to provide some clarification, particularly because we've given you some mixed information here over the last few months. Back in, I think, November, when I was talking to a few SBA reps, one of my kind of standard ways of trying to get information is because we are represented by a number of states, I'll just call all the different state reps and ask them the same couple questions and see how similar the answers are, because there are times where maybe information comes back a little bit different. But one of the things we are hearing about a second round is it was quite possible that a borrower would need to have their first loan forgiven before they'd be eligible for a second loan. It does not appear that's been the case. So what's happened, the SBA, I believe, decided that, okay, it's going to be hard to have everyone's loan forgiven before we roll out this program. They want to make sure they got money out to business owners soon. And so you can apply even before your first loan is forgiven. New things you need to substantiate that bullet point above. One of the things you do need to say is that you've spent your first PPP loan on eligible expenses. And so, for example, I think for pretty much every business owner, this is going to be the case, but essentially you need to have spent some money on payroll, those other eligible things. And Then in addition to that, to go up to the bullet point, I kind of skipped over this, but the increased loan amounts for impacted industries. So if you remember the first calculation, what would happen is you'd take your monthly payroll and you'd multiply by 2.5. So if you had a monthly payroll of, let's say it was $10,000, you'd multiply by 2.5, you get a $25,000 loan. There's a new calculation that's happening with the second draw loans. Some industries are eligible for a 3.5 times their monthly payroll. And so if you had $10,000 a month of monthly payroll, you could be eligible for a $35,000 loan. Our application process that we're doing, we are actually helping you walk through that. So based on some of what you answer, our team's going to determine if you meet the SBA's qualifications for being an impacted industry. Specifically, it's usually restaurants and hospitality-based industries that are going to be eligible for that. But if you are eligible for that, we are going to make sure that we qualify you for 3.5 times your monthly payroll. Kind of jumping forward, other really basic things, I'll kind of skim over this slide a little bit so we can get to some questions that I know a lot of folks are asking. For second draw applications, the loan terms are very, very similar to the first round of the Paycheck Protection Program. They're 1% interest. It's a 60-month term. If you were approved in the really early months, you might have started off with a 24-month term or 18. I think it was one of those two numbers at least, but everything is a 60-month term, and they are eligible for forgiveness. So really, by and large, it is essentially just that you're getting a second PPP loan. The forgiveness process is going to be similar as well. We have a little bit of detail on this from the SBA. Really, we've been told to expect a similar borrower process. So you're going to need to provide proof of payroll and other eligible expenses. But the other big change, and we'll talk about this in the next slide, is you're going to need to provide proof of a revenue reduction. And then this program in general, I'd say that the forgiveness stuff, we'll get more details on that with time, but really it's proof of payroll, proof of revenue reduction. Those are the chunks you need in order to be eligible. And so that should be a similar process. And actually, I've been fairly pleased with how the SBA's forgiveness has worked thus far. So this has been our primary question from a lot of business owners is, okay, what is this revenue reduction thing? What do I need to know in order to qualify? When the SBA announced this program first back in, I believe it was in November, we were hearing, they were originally saying it might need to be a 50% revenue reduction. And then right when the bill was signed, they were talking about a 30%. It is actually a 25% reduction in revenue. And so what they're looking at is a reduction in your total sales or income. And they're looking for either, there are two different ways of counting this I'll get into in a moment, but it's either by an individual quarter or it's comparing all of 2019 to 2020. And so the way this works is for an applicant above $150,000. So if your PPP loan is for $170,000, that would put you at having roughly like a $58,000 a month payroll expense. You would need to provide proof of the revenue reduction at the time of your application. So our application online, there is a space where you can upload documents for that. If your loan is less than $150,000, you do not need to provide proof at the time of application. You'll provide proof at the time of forgiveness. And so gross receipts, to talk through this, as there have been some questions there as well, it really is your business sales that they're looking at. Your income doesn't include costs of goods sold or any other expenses like that. And one thing that's important is this does not take into account any borrowed money. So for example, if you're looking at your Q2 of 2020 and trying to compare that to Q2 of 2019, you actually, let's say you got your PPP loan in that quarter. Your PPP loan does not count as income. Income is only going to be your sales. It's only going to be what you're earning from your clients and your customers. And so there are a couple ways to calculate this. The first is you compare 2019 to 2020. Did you see a 25% reduction in your gross receipts? My personal preference for this is just to compare your worst quarter in 2020 to 2019. I just recognized I got a typo on that slide, so we'll have to fix that really quick. So you'll compare your worst quarter. And so if you have your worst quarter in 2019 to 2020, and I'll get that text changed just so it's not confusing for folks. There we go. 2020 to 2019. And so let's say that Q2 of 2020 were just a couple really hard months for you, where you didn't get a lot of revenue, maybe you're even shut down during that period. What you'll need to show are what were your gross receipts in that quarter. You'll need to look those up, and you'll need to compare them to 2019. What I'd recommend, I know people have different kind of accounting things that they're doing and working based on, but if you want to look at your profit and loss, if you work in QuickBooks and can generate something like that easily, that's a good choice for sure. Or you can look through your bank statements and just be looking at your income. Make sure you reduce and don't include like a PPP loan or any other debt there, but you can just compare those. And I've got a little tool online. I'll see if I can drag over onto the screen here. Really basic. It gives you an outline of what's going on. This can be accessed on our website. I think Rachel might be able to share it out in the chat here as well. It's on the website. It's also linked in our application. But what's going to ask you is just, okay, select your quarter. I'd normally just choose your worst quarter that you had. So let's say I had a really hard third quarter. In 2019, I'll enter what I earned for revenues in that quarter I selected. So if I reference my bank statements or my P&L, let's say I had $50,000 of gross revenues there. In 2020, let's say that things were a little bit harder and I only had $30,000 of gross receipts in that quarter. What it'll do is it'll pop up and it'll show you, okay, I had a 40% reduction in revenues. Say, okay, if the numbers you input are correct, it looks like you're eligible. And so you'll want to reference and make sure you get correct numbers here. If you're below $150,000, you don't need to provide proof at the time of application. It is something where you just want to make sure that you're eligible before you apply. If, for example, if I entered a higher number here, let's say I put in, I had $46,000 of revenues, I only saw an 8% reduction in revenues. And it says based on numbers you entered, doesn't look like you have enough reduction in revenues to qualify. So you want to play with this. You can also say, okay, well, third quarter I didn't have it, but my second quarter was lower. You can change the numbers, see what works there. And you're able, if you want, just to email yourself these results. An important bit on this revenue reduction calculator, this is just meant to make this a little easier for people to understand. This is not officially proving that revenue reduction. It's really just a tool for at a glance for you to tell, okay, maybe I'm eligible, maybe I'm not. You'll want to make sure that you reference your bank statements and P&L, as those are going to be more what the SBA wants to see for the documentation. And so that's an area where I think we'll get more clarity with time, but really a profit and loss statement is a really good thing to work off of. Or if you just take 3 months of your bank statements, I've been saying that a couple times now, but if you take your April, your May, and your June bank statements, and you see what your gross revenues were, that's a good place to start. So they'll get more questions there, but that tool, once again, is available on the website. It's also going to be available in the application itself for the second draw. You can click into it from there just as a point of reference. A thing that's important to cover. So for returning Dreamspring clients, you might have seen in your email this week an invitation to apply. So the streamlined application for returning Dreamspring applicants is accessed through your email. It's a little button that you click that allows you to apply. And what this is going to do different than the website is if you just go to dreamspring.org, you're going to go through the normal application process. If you use the one in your email, it's going to pre-fill your application with a lot of information we've already verified. So for example, we know what your SBA number is. We know what your monthly payroll is. We know and have a lot of your documentation on file already. And so if you access through that route, it's actually a really quick and easy application. There's an option on the first page that you can actually select yes, that you want to move forward with your previous loan amounts. One thing that's really nice is that the SBA is actually allowing lenders to just work with payroll documents that have already been submitted. So if you select this option, if you see, okay, it'll show you on the page that maybe your last loan amount was for $20,000. If you think that works still, if you don't think your payroll expenses have gone up a little bit, you can say yes. And all that's going to do is it's not going to require you to upload any new documentation. Automatically, we're just going to attach the documentation you provided last round, and we're just going to approve you for that same amount again. You can select no as well, and that'll allow you to upload new documentation. So what I've seen so far, most applicants are just saying, yes, the last amount works well. If you put no, a good reason to do this might be that maybe your business, your payroll expenses went up a bit in 2020. It had more associated with there. That's just going to let you upload new documents. It's going to be similar stuff to last time. It'll be a IRS 940, 944, or maybe 4/4 of your IRS 941s. You can provide payroll documents from either 2019 or 2020. It does need to be a consecutive year though. So for example, you can't show us the first 2/4 of 2019 and then the first 2/4 of 2020. It needs to be a year in a row essentially. For any borrower that was approved with a Schedule C during the first round, so let's say you're a single member LLC, an independent contractor, a sole proprietor, usually we used your tax returns during the first round to get you approved. In that case, I'd usually advise that you just select yes, because what we're going to end up going back to is just using your 2019 tax return again, which will largely end up in the same loan amount because we do need filed tax returns in order to do this. And so, for example, you probably don't have your 2020 return done yet. And so if you're a single member LLC, sole prop, anything like that, I'd probably just say yes, move forward. If you're a larger business and you file 941s and have some payroll, things like that, if you think you might qualify for more, you're welcome to select no and upload new documentation. If you use your pre-filled link, it's going to skip a lot of other fields. So you won't have to upload your ID, your proof of address, articles of organization. And then the nice piece is that if your loan is less than $150,000, you don't have to show proof of revenue reduction either. So for example, if you had a $60,000 loan, really the application process is just going to be you going through, verifying the information that we have in there already, saying that you're okay with your loan amount again, and then just signing a few things to say that you believe you're eligible. So for a lot of returning clients, I've been hearing it's a 5 to 10 minute process if you want to move forward with your same application amount, and we are reviewing these rapidly. We can also accept second draw applications for new Dreamspring clients. So for example, if you didn't work with us in the first round of the Paycheck Protection Program, maybe you worked with a bank or another lender, or if you know other folks, we are accepting applications from people who didn't receive their first PPP loan from us. It's been a little bit of a constriction in institutions that are offering second draw loans. So not quite as many banks are participating. Some credit unions are referring people to other lenders, things like that. At Dreamspring, we're getting a lot of people who are applying with us who maybe didn't work with us in the first round. If you're in that case, you'll need to know a little bit more than a returning borrower. It's just because we don't have your payroll docs on file. It is still a pretty streamlined, easy application process. So you'll just need to know your general business information, what's your business address, phone number, all that stuff. You will need to know your SBA loan number. SBA loan numbers are 10-digit numbers that are assigned by the SBA. You want to make sure that you have that because we didn't work with you in the first round. We don't have it on file. You'll need to upload payroll documentation, ID, proof of address. For any of our clients that worked with us in the first round, you are welcome to refer folks over to us as well. We are processing those applications and moving through them quickly. One question I've gotten quite a bit from people is how can I improve my chances of being approved? And so there was a lot of stress during the first round, especially because funding ran out so quickly. In this round, I'm kind of in the middle where I think the funding won't go super fast. I'm hopeful it'll last for a couple of weeks here. The program is technically eligible and open until March 31st, but I'm going to jump down to the bottom bullet point that I think if you want to be approved for a second draw PPP application, a good first step is just to apply sooner rather than later. There's a lot of stress from people during the first round about just kind of not knowing if they were eligible or what they needed to do. If you have time this week to get an application done, if you haven't submitted one yet, I'd say that I'd probably just get that sent in. The SBA is going to start processing the second draw applications tomorrow. So what that means is that we've been accepting those, we've been piling them up. We've got a lot of them and we reviewed and approved already internally. And so hopefully we'll be communicating out to those borrowers soon. But starting tomorrow, we'll be able to submit to them. First draw applications can be submitted to the SBA now. And so we've been able to start processing those with the SBA. We've been able to start submitting those. The good piece, a little note there, I think first draw funding, there's a little bucket of money that the SBA set aside for that. So for any borrower that wasn't able to get through last time, I actually think that the funding there will last for a little while longer. And so funds are technically available until March 31st. The way it works out, there's $284 billion overall. There's $35 billion that's set aside for first draw applications, $250 billion for second draw applications. And so I'd say apply sooner rather than later. Other pieces that you can do to make sure improve your chances of qualifying is just to read the application carefully when you're applying. So in reviewing our first couple of batches of applications, I've noticed some things where I just don't think everyone's reading the application fully, especially the later questions in there. There are some things you need to say that yes, all of your employees live in the United States, and then maybe no, that you don't have any felonies. And so make sure that you read those questions carefully and they answer them to the best of your ability. Because if you just go through and select all yes or all no, you might end up having a little bit of a delay on your application as we have to reach out to you and verify that stuff. You might need to sign something else. So it just takes your application a little longer to process. So as you go through, just read things carefully. And you want to provide information to the best of your ability. So sometimes during the first round, especially, we get someone who's applying who might not have payroll docs on hand, and they'd upload a note saying, oh, I don't have these. Am I still able to qualify? What I'd say is that if you're able to provide payroll docs and gather those before you apply, that's probably a good choice. The last one would be to apply at a CFI. So that's a community financial institution. And so what that means is there are a number of nonprofits like Dreamspring, different organizations that are CFIs. Your state might have a list of those. CFIs are able to submit and process applications with the SBA earlier than larger banks. And so we've been told that we'll have at least 2 days where Dreamspring qualifies as CFI. We'll have at least 2 days where we're able to submit and approve applications before the larger banks are able to participate as well. So the nice thing is that just means that there's an additional 2 days that we can hopefully get as many applications pressed through as possible. So if you are working with other business owners, if you're applying and you don't feel like applying with Dreamspring, apply at a community financial institution, because I think that we just get a head start. It's almost like there's a race and we get to start running 2 days before everyone else. So I think it's a really great step, especially because community financial institutions primarily work with smaller borrowers. So I mentioned our max loan amount is $250,000. And so we're working not with a $2 million request, but a lot of $10,000, $20,000 requests. And so it's nice that they give us the ability to start working a little bit earlier there. All right, I've probably talked enough at this point. I know we've had a number of questions. I know we've had a bit of an overview here. Rachel and Gwen, I know you guys have been kind of monitoring the chat. If there are things I did not cover, you're welcome to start sending some of those in. We're going to kind of go through and hit some of the kind of highlights and do our best to answer them if possible. So you can use the chat function, but go for it, Rachel.
Yeah, I was just saying, thanks, Kevin. We have some that have kind of piled up in the Q&A, box, but we've been answering them as we've been going. A couple that we haven't gotten to yet. So do you need to confirm headcount remaining of employees that it's the same when they're applying for forgiveness? Could you talk about that a little?
Yeah, so Rachel, do you have any context? Are they asking about the forgiveness application or for the second draw application?
They said forgiveness. So.
Okay, got it. So for a forgiveness application, for loan amounts under $50,000, they don't actually care that much about your number of employees. For loans above $50,000, they do care a little bit. You have to sign and substantiate that to the best of your ability. You've either tried to retain people, you've tried to keep people on payroll. And within that, if someone quits, for example, they don't hold that against you. I would say that if you're in a situation where you're unsure about your employees, your count there, I would wait for the new application to come out. So far in a review, that hasn't really come up with SBA. And I would say, to the best of your ability, report the number of employees and sign the according box in the forgiveness application. There's one that says you haven't had any employee reductions. There's another one that says you've had some employee reductions, but that's usually been people quitting, retiring, things like that.
Great. Another question that's come up, and I'm not entirely sure what this person, I don't know what context is behind it, so I might need to answer this in a few ways. She asked, I am still unclear on what I would need to provide from 2020 if I think I may be able to increase my loan amount. So I think the first thing I would just start with, and then Kevin, I'll have you go into what you need to provide. The first thing I'll just start with is you can only increase your PPP loan amount in the second draw of PPP if you are in the restaurant or accommodation business, because that would show, industry, because that would show that you can qualify for up to 3.5 times your monthly payroll. If you're in any other industry, it's still the same as in the first round, which was the 2.5 times your monthly payroll. And then Kevin, maybe talk about what they need to provide from 2020, I guess, in that context, if they do qualify.
Yeah, and so I'm guessing this is for a returning borrower, so someone who worked with Dreamspring previously. So let's say you got $20,000 last time. The impacted industry, the SBA, we handle that within all their guidelines. So we'll let you know if you qualify for that based on the other information in the application. It's just about what type of work you do, essentially. If the question is regarding maybe your payroll is higher in 2020 than it was in 2019. So for example, you've got just higher monthly payroll you're sending out, you would need to usually provide your IRS 941s or 944 for 2020. And so you could provide, for example, either 4 sequential quarters of 941s or your 2020 IRS 944. That would be an option there as well. The application itself does walk you through all the available options though.
Thanks, Kevin, and thanks for clarifying that last part. Yeah, payroll does increase in 2020. My bad, I was thinking in terms of the impacted industries. And then someone asked if vaping would qualify as an impacted industry. So impacted, if you mean you'd qualify for potentially more than the average industry, no. In terms of if that business can apply for a PPP loan, that's fine. But we actually at Dreamspring would not be able to work with that business. We have our board has some rules around, different industries we can and can't work with. However, other lenders that don't have those restrictions could look at that. A business that started in late 2020 is another question that popped up. That does not qualify for PPP. It has to be February 15th, is that correct, of 2020 or previous to that, Kevin?
Correct, yeah. So a business needs to be operating as of February 15th, 2020 to qualify for a Paycheck Protection Program loan.
Great. Another question that popped up in the Q&A section. Do I send my payroll and utilities expenses to Dreamspring for the first round of PPP forgiveness? And do you also need a Form 941 for the IRS?
Yeah, so for the first round of forgiveness, we've been sending people out invitation links there. So you should have seen your email probably a couple times at this point. There's a invitation to apply. It's pretty straightforward. All you do is you click it. It's going to pre-fill all your information for you and ask you to upload your documentation. Usually that's going to be proof of payroll. It does give you all the options in the application itself. For most business owners, I've been recommending we can absolutely look at other business expenses. When they expanded to 24 weeks of time for the eligible expenses, when you applied, you were originally told you only had 8 weeks to show those expenses. Now that's 24. I'd focus primarily on payroll. It's easier than trying to track down every phone bill, every utility bill. So, but however works, you can upload that as part of the application online there. It'll just be through that link that you've been sent in your email. If you need to get it sent to you, can reach out to our client services team and they'll send it again. But I think it's probably been sent out to most folks 3 or 4 times now.
Another question, do we get copies of these slides by chance?
Yeah, so after the presentation here, we'll be putting out the deck. We'll be sending that out to all the participants who signed up and attended. We'll also be putting this online if you have anyone else you need to share it with.
Next question, we are owner-operated, self-employed with 3 owners. Can we all apply for PPP?
Yes, and so what this is going to come down to in this instance, it'll be a question of how you're filing your tax returns. So I'm guessing in this situation that each owner is probably filing an individual Schedule C. In that instance, you'd probably apply independently. If you are a corporation that's only paying owners, for example, as independent contractors, you're paying them through a 1099 MISC, each person would have their own Schedule C and they'd apply separately.
All right, next question. Do you know if the SBA will do another credit score inquiry and what minimal acceptable score will it be this time?
So the SBA for PPP loans does not do a credit check. We do a soft pull internally. That's just part of identity verification. And so that is not something that shows up in your credit report, or it shouldn't be. I think in the first round, there were a couple of folks that might have shown up for, but I would not expect to see anything on your credit report for a PPP loan, either in terms of something that you owe or any inquiries posting either.
All right, next question. How can a partnership entity that did not have payroll in 2019, but they did in 2020, apply for the first round?
It's a good question, actually. And so your options are going to be kind of split there. And so, for example, if you wanted to, you could provide your 2019 1065P partnership return. So your 2019 1065 return is one option, or you could provide documentation of your 2020 payroll records. And so your 2020 payroll records would primarily be by providing your 941s or your 944 for 2020. Unfortunately, you cannot stack and use both those documents because one's from 2019, one's from 2020, and we just have to use one consecutive year.
Cool. Another question. I clicked on the link to start my PPP forgiveness, and it took me into the new application. So I'm not sure if the forgiveness application went through. What would you recommend to them?
That's a good question, actually. So I think if it took you to the new application, you might have had an incorrect link that was sent to you. I would probably reach out if you have a contact to the organization or a loan officer. That's a good thing. Or we have our forgiveness at SBA, sorry, forgiveness at dreamspring.org. So forgiveness at dreamspring.org. You can reach out there and ask them to verify that your application has been received. If it hasn't, they'll probably give you back your link so you can put that through next time.
Right. I have two, I don't actually know the context behind this. So I have two new people. Where do I go? Can I sign them up for a loan? I'm gonna maybe skip that question and just ask for a clarifying thing for them first. Next question. I have a small business with no employees. I am the sole prop. So I'll just pause this question real quick. You actually do have an employee, it's you. So you do have one employee. I lost over 50% in sales in 2020. I've not applied for any kind of funding. I also have a regular job, but my business lost money. Which is the one I should apply for? PPP or EIDL, grant or loan?
Yeah, it's a good question. So it sounds like they did not receive a first round PPP loan. You can apply for both the Paycheck Protection Program, and what you'll do is the first draw application, because part of the requirement for the second draw is that you need to receive the first one. So apply for the first draw application. And then actually, it might not be a bad idea to apply for EIDL as well. That's a separate program that's offered by the SBA directly. So they don't work with lenders for that. So Dreamspring, for example, doesn't participate in EIDL. EIDL is a little bit different. They have just kind of larger loans that they're giving out for lost revenues. And so, for example, that might be a 15 or 30-year loan that they're giving you. You do have to pay it back. The Paycheck Protection Program, the main piece there is that it is a forgivable loan. And so ideally, if you provide the correct documentation at forgiveness, which, like I said, we've had of the ones we've processed so far, it's been 100% that have been fully forgiven, which is great. Then you won't have to pay anything back. So I would definitely apply for the Paycheck Protection Program, and think about if you want to apply for EIDL.
All right, thanks, Kevin. Another question. In my first application, we were able to apply as other in regards to business entity. I don't see other as an option this time. Is it possible to fill in other? We are an odd bird doing business as, and then they wrote ... have a host sponsoring agency. Do you have any advice for them, or do you need more context?
I can kind of talk through this a little bit. So the SBA did change the applications. So for example, they shifted the first draw application slightly. They also changed the second draw in terms of some of the entity types. And so what I would do there is it's about your business legal registration. So I'd pull up your articles of organization that you have. They're probably filed with the state. See how you're registered, and go based on that. You should hopefully fall within one of the boxes that's available. If you have more questions there, I'd reach out to our client services team, provide a little bit more detail, or maybe you can do that now with Rachel in the chat. Or Rachel, if you want to share my email with a person in the chat, that also might be a good step as well.
Great. Next question. So is there any forgiveness for employers that have contractors that are paid with a 1099?
Yeah, so that's a good point. So within this is an area of confusion. The way this works out, the SBA views it that your contractors are not employees. you're eligible to apply for payroll for your employees. And so that's why we're using an IRS 941, for example, as your approval document. So in that instance, if you have contractors you're working with, what they need to do is they need to apply as individuals. So they'll, from their tax return, they'll probably have a Schedule C in there. If you're paying them by 1099, that's how they file their taxes. So each of them would apply independently. That does leave you as a business owner. It's not quite as helpful for you. You are probably able to apply for anyone that's on payroll, whether that's you as an individual or if you have any employees that are not contractors. But independent contractors don't count either in your employee count or even towards your payroll expenses. So that is something where it's not quite as strong for folks in that situation.
Next question, can you share what type of loan, again, what type of loan you're recommending? I think by that, I think this is Kelly, this is your question. This is a PPP loan that we're talking about here. And so Kevin, the question is, if you're needing assistance in paying debt you incurred over the year to keep your business running. So
yeah, so I think that it might that actually sounds like it might be the Community Advantage program she's referencing there. It could be at least. So for Kelly, what I'd say probably is that of the options on the table, I think everyone should apply for the Paycheck Protection Program. If you've gotten a first and second draw already, and you still feel like you're needing additional help, the EIDL program that was referenced earlier, so EIDL is how it's spelled, that could be a good option because those are pretty long term length loans. It's either 15 or 30-year loan. I think it's 3.75% interest, which is great. The SBA Community Advantage program I mentioned as well, that can be a good option for a lot of borrowers. That can be used to refinance debt. You are going to need to meet some cash flow requirements there. So if 2020 was a really bad year for you, that might be trickier. But that could be a good option as well. That's SBA program is also really good if folks need new equipment, if you need to do anything as far as a pivot with your business where you think you want to change your model and you need some capital in order to make that happen. That's where that Community Advantage loan can be a good option. And those are going to be administered. It's an SBA 7A Community Advantage loan, which is kind of a mouthful, but Dreamspring does those internally here. There are other nonprofits, depending on where you're based, that might administer those as well.
All right, another question. What about people starting a business in 2020 and possibly in a shuttered venue?
Yeah, so within that, if you weren't started prior to February 15th, you kind of end up in a little bit of a bind with PPP. You're usually not eligible. You also end up in a similar situation with EIDL. I think for some reason they decided to use February 28th for their number, so it's slightly different. But if you started after those days, then you're left with the other options that are on the table. So looking into that Community Advantage program, as mentioned, could be possible. That might be tough from a cash flow level, but that'd probably be my next kind of gut. I also think there are a lot of local initiatives. So for example, I'm based out of Colorado, Rachel's based out of Arizona. I know that different states have different programs that are available. So I might dig around the state level a little bit as well.
Thank you. Another question, and I'm not sure if they were referring to forgiveness here or PPP, first or second draw. They asked, what if there was an employee reduction that had occurred several months after the 2.5 months? I would guess this is a forgiveness question.
Yeah. So that, as long as you can show that you spent the money on eligible purposes, you can let us know that you need to use an 8-week cycle there. You'll have your you'll need to provide your proof of payroll within that timeline. It's possible, for example, if you need to use a 24-week cycle in order to show enough expenses, which is where a lot of folks seem to be at, that you'd need to provide all the documents for up through 24 weeks, and you need to document the employee reduction on there. And it's a question of kind of why that happened. Is it something where they quit? Were there local restrictions that were in place that didn't allow you to operate? If you're in that situation, if your loan's less than $150,000, I might wait another week or two and see what the new application looks like.
Great. Another question. Is there any way to increase the number of pages of docs you can upload at one time?
Yeah, so that's a good question, and that's an area we've had some challenges from folks. The application itself allows for, I believe, a total of 5 or 6 documents to be uploaded at once. The reason we've done that is that when we give folks the ability to upload more than that, it just becomes this really big swarm of information that's often not necessary. So what I'd say, what I think is the best process there is to try and combine the documents you have. There are a lot of different ways of doing that on your computer. For me, for example, I often work with PDFs and I'll just combine a couple of them together and see if you can do that first. If you're unable to do that, I'd upload what you have. And there's a little note section at the very, very end. You can leave us a little note there that says, hey, I tried to upload things. I just didn't have enough space. And that'll trigger our loan officer to reach out to you as soon as they get to your file. And they'll give you another little box where you can upload stuff there.
Another question, how can I verify that my recent second draw application was received and if any additional information is required of me?
Yeah, so that's a good question. So I mentioned we're working on client communication stuff. That's an area where kind of as this program was released, a little bit of context for people, the application came out Friday at I think around 10 p.m. And so our team worked through Saturday and Sunday to get it stood up, and we were able to send out application links to people on Sunday afternoon. In terms of the first row of things, we've reviewed and approved a lot of applications. We got to turn on the communication mechanism. And so I think hopefully this afternoon or sometime tomorrow, you're going to start seeing some emails regarding the status of your application. For right now, I would put in the context of not getting feedback, or no news is good news almost. So you should have seen a confirmation email initially when you submitted it. I'd check your email inbox for that. Sometimes they go to spam, things like that. But also recognize that we'll be in touch with you soon. Yesterday, that was something I'd really hoped to get done, to get set up, but it became kind of this process choice between improving the application and reviewing applications compared to getting the communication things put in place. So I'd look for that shortly.
Next question, can you apply if you also received unemployment?
So you cannot receive both at the same time. And so, for example, if you are actively and currently receiving unemployment, then you're not eligible for PPP. I'm guessing that you're probably a sole proprietor, independent contractor, and it kind of becomes an either or choice. One thing you can do is that you could theoretically freeze your unemployment for a while, take the PPP loan, and then go back on unemployment once you've reached your average monthly payroll rate there. So usually for most people, I think you're off unemployment for around 10 weeks in that situation. That kind of becomes a judgment call about what's better in your situation though.
Next question. I have a nonprofit in existence since 2007, but we didn't hire employees until January 27th of 2020, all volunteer or contractors before that date. So there's no 2019 payroll, but there's a small payroll starting in February of 2020. Would we qualify for a PPP loan?
Yeah, you would. And so what's happened is that the entity needs to have been established prior to February 15th, which you were because you go back a long time before that. And what you'd provide there essentially is your 2020 payroll. And so if you have it available, I'd say either an IRS 944 or a 941 from each quarter. So that could be like Q1, Q2, Q3, and Q4 of 2020. You'll have to see if Q4 is available for you yet. I know there's usually a deadline for those of late January. So see what you have available, maybe upload some payroll records as well, but you should be fine with either of those options.
Next question. In the loan application, it asks for info regarding owner 1 and owner 3. I don't know if they meant owner 1.
No, they're right on that. I noticed an error in the application this morning that we haven't gotten corrected yet. So they are correct.
Okay.
Yeah.
There's no place to enter info for owner 2, but it looks like that's going to be fixed.
That will be fixed. And what the number of the owner actually doesn't matter in that situation. The way our stuff works in the back end, The reason I didn't notice it at first is when it shows up for our team to review, the owner 3 information just goes in the owner 2 box on the next side. And so I know it's a little confusing, but if you're in process with an application like that, feel free to just submit it and we'll correct it on our end. We do have the ability to mess with some stuff like that. After we get off the call today, I'm going to go and dig into what the problem is there, and we'll get it fixed though as well.
Next question. I have a single member LLC that qualified for first round PPP with my 2019 Schedule C. I haven't completed my 2020 tax return yet, but I anticipate my overall net income reported on my Schedule C for 2020 will be higher than what I reported in 2019. However, my fourth quarter 2020 revenue is more than 25% lower than my fourth quarter 2019. Will my LLC still qualify for second round of PPP? And if so, would the second round amount, maybe how would the second round amount be calculated?
Yeah, so what I would do in this situation, you've got a little of a personal choice here. If you're going to have your tax return available soon, you can wait and apply using the pre-filling link. If you select no, I'd like to calculate a new loan amount. If you get a filed copy of your 2020 return that you're able to provide to us, we're absolutely willing to evaluate with that. You're going to have to also think about the timeline that you're on there. The reason I said earlier I'd recommend that most people in your situation just stick with the 2019 number is that from my perspective, what I wouldn't want to see happen, for example, is that you wait until February 10th when you finally get your tax return back and you're good to go, and then you apply and funding's run out at that point. I would say if you feel like that's going to make a really big substantive difference for you, you can wait and see. But you also could just accept the information based on 2019. Unfortunately, we do need to have the filed copy from 2020 in hand before we could use those numbers though. So kind of an either or situation, and it's just up to your preference.
Next question, can you use real estate as collateral for an SBA loan? If so, what loan to value will you lend up to?
Yeah, that's a great question. So for an SBA loan, we can absolutely use real estate. We operate in a number of different states. If you're in Texas, the one thing I'll say is you cannot pledge personal real estate in Texas based on state laws there. In terms of when we start evaluating something as collateral, we need to see at least a 70% loan to value. And then we'll start evaluating that. The good thing about an SBA loan is that it very intentionally said some collateral available to be pledged. You don't need to hit anywhere near like a 75 or 100% ratio for the collateral being pledged there. And so I would say if you're a little worried about having enough collateral, but you're not sure, that might be a good option to evaluate. Partially because those requests, if you're, for example, if your cash flow is good or your business is well established, even if collateral isn't a strong piece, you still may be able to qualify.
A few folks have asked where they find the SBA number for their round one PPP loan.
Yeah, and so if you're a Dreamspring client, when you click your link that's been emailed out to you, it's going to have that information in there. The nice thing is that depending on the application, it may fill it in the background. It may show you a box that says your SBA loan number and it's filled in there. The good piece is that either way, it's pre-filled for you. If, on the other hand, you didn't work with Dreamspring in the first round, you're considering on the second, or you're reapplying with a different lender, you'll need to try and dig into your loan agreement. Ideally, whenever you sign something, whoever you worked with sent you a loan agreement, sent you something to kind of show what your loan number was. If you don't have it, maybe reach out to your lender. I would say try an email and a call and say, hey, I need my SBA number. And that would be the steps I'd take at least.
Follow-up question from the client who mentioned that we had that error with the owner 2 fields. She was asking, is it okay if they put the owner 2 information in the owner 3 boxes?
Yeah, absolutely. And I think you can send that through whenever you'd like. If it's there now, hit send. You don't need to change anything. I think it may take me an hour or two to get that shifted on my end, and that won't cause any sort of delay with your application at all.
And that was the final question, which amazingly wrapped up right at the end of our time.
Perfect. Well, for everyone who's on the call today, thank you so much for joining us. If you've applied for PPP already, if you're thinking about it, if you're just kind of evaluating your options, thank you so much for joining us. Wherever you're at, I hope that the rest of the weeks and months are good for you in this year. Our team, I know that we're all excited to have some good options for folks, and we'll do our best to keep up with volume and be in touch with you. So thank you so much for joining today, and have a great rest of your day.